Cool guys, hey look, welcome to another of my little rants. This time round I wanted to talk about the Auckland housing market. It's a pretty interesting place at the moment. So there's a lot going on. We've got some global stuff happening, we've got Brexit, we've got all sorts of things happening overseas. China certainly looks to be a bit off the boil in terms of its export markets. Commodities are still weak globally, which just sort of highlights low demand and therefore manufacturing's really struggling. We've got high debt levels, everyone's sort of aware of that. We had Brexit with the UK and everything that's going on in Europe, a run on Italian banks and a bank needing to be bailed out overnight. So look, there's a lot of global uncertainty out there at the moment. That's certainly playing out in the share market and in the currency markets. Not really playing out in the property market in an obvious way, but I think people are more uncertain, and when they are more uncertain, you're going to see a lot more people sitting on the fence. The market is slower this year than last year, and with all of this uncertainty, I think it is likely to slow a little bit more. On the other side of it, we've also had tightening credit policy, and I've talked a little bit about this before, but banks have tightened up in terms of overseas borrowers significantly. In fact, it's quite hard for people overseas now to borrow in New Zealand to buy New Zealand property, as well as restrictions around using foreign-based income to service New Zealand-based debt. And again, that's actually reasonably significant in terms of the impact that they can have. Also in the background, the banks have been sort of slightly tightening their credit policy, making it that much more difficult for people to buy, but principally property investors. So all of these things are happening. I think the impact on the market is it has slowed down a bit, but market correction, sure, there might be something that sort of certainly comes from overseas, and last week Brexit was looking like that could create a scary situation, but that seems to have settled down. Look, there's no question that there's a whole heap of issues around the world at the moment, but if you look at the New Zealand economy domestically, it's actually pretty good shape. We've got good exports, currency's going up a bit, that's not so good. We've got high levels of employment, generally good level of confidence. The real thing that sort of hangs out as a bit ugly is house prices. But is there an imminent correction in those? Well, not unless you have some sort of global event. And even if we have some sort of global event, at the end of the day, New Zealand doesn't look that risky, and I know there would be people that would completely disagree with that statement, but we've got high levels of immigration, we've got a low level of house building, we've got a general level of confidence, and New Zealand's relatively speaking a low growth economy, and if you look at businesses in New Zealand, they generally tend to be quite conservative and low risk. At the end of the day, market correction is going to be driven by a big spike in unemployment, and whilst there's always that risk sitting out there, there certainly doesn't seem to be anything on the immediate horizon. So I kind of think what's going to happen over the next 6, 12, 18 months is a reasonable amount of stability in the market. You're going to see a slowdown. There will be a little bit of price softness there, and I wouldn't be surprised if we don't get some headlines over the next 3 to 6 months that suggest that prices have come off the boil a little bit. I think that's completely reasonable to expect, but that's about it. I think if you're in the market to buy, you've got to work hard at it, but there are potentially some good deals starting to come through. So that's it for me for now. I'll talk to you next time.